Public.com presents The Rundown, your daily market update in 5 minutes. My name is Zaid Admani, and today is Monday, February 3rd. In today's episode, we tell you the fallout from Trump's tariffs. Markets are falling. We'll tell you which industries are getting hurt the most. We also preview this upcoming week, ton of earnings to look forward to, and a jobs report. Then stick around to the end of the show to find out the latest tool from OpenAI that can make your job much easier. All right, let's go. Well, guys, the stock market ended last week on a down note. The S&P 500 and NASDAQ both finished the week in the red, thanks to some shocking news on Friday afternoon. The Trump administration confirmed they were moving forward with 25% tariffs on Canada and Mexico and 10% tariffs on China, which freaked out the markets, sending them in the red to close the week. And that chaos carried over into the weekend and into this week. Canada, Mexico, and China have all pledged to retaliate against these tariffs. And the most shocking trade news this weekend might be the Dallas Mavericks trading Luka Doncic to the Lakers. I'm still processing that one. Now, going back to the tariff stuff, the economic impact of these tariffs could be big for all parties involved. Mexico, China, and Canada are the U.S.'s biggest trade partners. Goldman Sachs thinks these tariffs could have a 3% hit to the S&P 500 earnings forecast. Some people think it could be even worse. And we might not be done yet. There might be more tariffs coming. Last night, Trump said that he plans to slap tariffs on the EU.
It will definitely happen with the European Union, I can tell you that, because they've really taken advantage of us. And, we have over a $300 billion deficit. I wouldn't say there's a timeline, but it's going to be pretty soon.
So we might be on the verge of a full-on trade war now. And that is freaking out investors. This is the second Monday in a row where we are waking up to markets selling off. Last week it was DeepSeek. This week it's tariffs. So we'll have to see how the rest of the week goes and what the fallout from these tariffs might be. Oh my God, we just got some breaking news. The Mexican president said that tariffs will be paused for 1 month after her discussion with President Trump. As part of pausing these tariffs, Mexico will deploy 10,000 National Guard troops to help secure the border, and they're going to work with the U.S. on security and businesses. So markets have cut some losses this morning after this announcement. Again, this is all moving so fast, and I'm sure we're going to have more information throughout today and the rest of the week. And besides the tariff stuff, it was already setting up to be a big week. We have a ton of earnings this week. Palantir, Google, Amazon, Uber, Disney, Eli Lilly are all reporting earnings, just to name a few. And then on Friday, we are getting the jobs report, which will tell us how many jobs were added to the U.S. economy last month. So there's a lot to process right now. We're going to be talking tariffs, earnings, and the fallout of all this throughout the week on the podcast. So it's a great time to get subscribed. Let's run through some headlines. And obviously, we're going to talk more about the fallout from these tariffs, starting with automakers. They are probably the most vulnerable to these tariffs. Car companies send billions of dollars of vehicles and auto parts across the U.S. borders from Mexico and Canada on a weekly basis. GM and other major automakers make up to 40% of their cars in Mexico and Canada, and that's why the auto sector is taking a hit in response to the news. Now, with these tariffs in place, that's expected to raise the prices of vehicles for U.S. consumers now. The stock price for these automakers are down across the board. Prices have recovered a bit since Mexico announced a pause on these tariffs. GM stock is probably the hardest hit, and that's because GM makes more cars in Mexico than any other automaker. In 2024, GM manufactured nearly 850,000 cars in Mexico, but they're not the only ones getting impacted. Shares of European automakers like Volkswagen and Stellantis are also dropping. 3 of Volkswagen's most popular cars in the U.S. are made in Mexico, so they are going to get hit hard by this. The Japanese big 3 automakers, Toyota, Honda, and Nissan, are also getting hit hard. Nissan has 2 plants in Mexico and exports about 300,000 cars a year to the U.S. Meanwhile, Toyota and Honda each make about 1 million cars a year in North America. So automakers are one of the biggest losers this morning from these Trump tariffs, and we'll have to see what they do. Are these car makers going to bring manufacturing back to the U.S., or are they just going to increase prices on their cars? I think it's going to take some time to see the full fallout from all this. We're just getting started. Let's talk about another industry that's going to get hurt by these tariffs. The booze industry. There's a lot of importing and exporting of alcohol across the Canada, Mexico, and U.S. borders, and these tariffs are going to be a major buzzkill. Ontario, Canada has responded by removing American alcohol from its stores. Canada controls its liquor sales through government-owned organizations, so they're able to act quickly on this. The Liquor Control Board of Ontario sells about $1 billion worth of U.S. alcohol annually, and Canada is the second largest market for American liquor exports. So alcohol stocks are also down on the tariff news. The alcohol trade is a critical piece of the economic relationship between U.S. and Mexico. Because of America's infatuation with the Mexican beer, Mexico Mexico accounts for about 83% of beer imports to the US. The most popular beer brands in America are Corona and Modelo. They're owned by the company Constellation Brands. And we can't forget about tequila. US imports of Mexican tequila and mezcal totaled $4.66 billion last year. That's up 160% from 2019. So these tariffs might shake up the alcohol industry and the importing and exporting of alcohol across the US, Mexico, and US, Canada borders. If you want to do a deeper dive on tariffs, check out one of our deep dive episodes that we did from a few weeks ago. It's jam-packed with information and it's more relevant now than ever. We'll drop a link in the description of that episode to go check it out. Let's talk about some stocks making moves today. There's not a lot of green on the board today, but one winner shaking off the tariff sell-off is Tyson Foods. Tyson raised its profit outlook for 2025 after the meat producer delivered its best earnings performance in 2 years. Low cost for corn and soybeans helped lift profitability for its chicken business, which helped offset losses in its beef business. Tyson Foods stock is up around 2% this morning in reaction to their earnings. On the flip side, there are a lot of losses today, but I want to call out crypto because it is falling sharply as investors reassess riskier trades. Bitcoin is down to $95,000 this morning, and Ethereum is being hit especially hard, down more than 15% over the past 24 hours. Other altcoins like Solana, which has been on a tear recently, is back down below $200 after reaching $285 less than a month ago. Now, Bitcoin and others have recovered a bit since Mexico announced the pause on tariffs, but something to watch out for. Let's wrap the show with a fun fact. OpenAI is launching AI agents for ChatGPT Pro. OpenAI announced these new features last night, saying that these new additions help users with deep research, providing users the ability to obtain more detailed responses from the chatbot. I mean, OpenAI has previously claimed its agents have the capabilities of research analysts, and they said the agent's response can take between 5 to 30 minutes, so it's a pretty slow process. But if your job requires research, it looks like this new tool will be your new best friend. Now, this new tool will only be available to ChatGPT Pro users to start out, which costs $200 a month, but they're eventually going to roll it out to the Plus users, which costs $20 a month, but there is going to be a limit on how much you can use it. Now, just as a heads up, OpenAI themselves warned that this new tool can just make up responses, so just be a little careful in the early days. I wonder if the Dallas Mavericks used this tool to write a deep dive research on Luka and got some really bad information back and traded him away to the Lakers. I still can't believe that happened. It might have been the most shocking news of the weekend. Well, all right, guys, that's the rundown for today. Another wild start to the week. Didn't think that last week could be topped with the DeepSeek drama, but here we are. We're going to have a lot to talk about this week. The fallout from the tariffs. We're also going to have a lot of earnings to recap, like I mentioned in the intro. We got the jobs report as well. So another busy week coming up. We're going to be covering it all on the podcast. So it's a great time to subscribe to the podcast if you haven't already. Share this podcast with someone who might find it useful. And if you have like 15 extra seconds, consider giving us a 5-star rating on Apple, on Spotify. Vote in today's Spotify poll. Leave us a comment on Spotify. All that engagement really does help us out, and it helps other people find the show. Thank you guys so much for listening. Shout out to Mike and Connor for all the help behind the scenes, and we'll see you guys back here tomorrow.
This is The Rundown, your real-time resource for news, events, and trends in the markets. All views presented in the show reflect the opinions of the guests. You should not take any mention of a publicly traded security as recommendation to buy, sell, or hold that security. Rundown guests are not financial advisors and are not affiliated with Public Holdings or its subsidiaries. You should make your own financial and investment decisions or consult respected professionals. Learn more at public.com disclosures. In partnership with Zaid Money, brokerage services for U.S. listed, registered securities are offered by Open to the Public Investing Incorporated, member FINRA and SIPC.